Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. I am the Chief Investment Strategist at Standard Chartered Bank India. We've just released our monthly India market outlook titled Too Soon to Pivot. In today's podcast, we summarize our macro and key asset class views, and in the subsequent podcast, of course, we will get into more detail in the different asset class and key questions. A major development over the past month has been the reset in market expectations of the timing and quantum of monetary policy easing by global central banks, which is in quite contrast to the market consensus getting into 2024. Major global central banks like the US Fed, European Central Bank, and the Reserve Bank of India have been unequivocal in communicating the risks of a premature pivot to easing and that getting inflation closer to the medium-term target remains a priority. This, of course, has driven equity market volatility in the recent weeks as bond yields have trended higher. But despite this pushback in early rate cut expectations, risk assets have continued to scale new peaks supported by strong demand and corporate sector profitability. In India, the recent union budget prioritized fiscal prudence while being supportive of growth. The higher capex outlays announced in the budget was supportive for equities, while lower than expected fiscal deficit target and the government borrowing saw the bond yields decline. Now, how does this influence our asset class views? We remain constructive on domestic equities over the near term, as we see them supported by strong macro fundamentals amid a growth-supportive fiscal budget, resilient corporate sector earnings, robust domestic investor flows, and pre-election optimism. Within equities, we stay overweight large cap equities given higher margin of safety in terms of earnings and valuations and stronger balance sheets to cushion the impact of tighter financial conditions. On sectors, we prefer a barbell sector strategy where we have preference for domestic cyclicals and accordingly maintain an overweight on consumer discretionary and industrials. We balance this by a defensive tilt in the portfolio through an overweight on healthcare. Now coming to bonds, we expect it to outperform cash as domestic bond yields trend lower over the next 6 to 12 months, while we remain neutral on bonds as attractive absolute yields are counterbalanced by below average yield premiums and stretched medium-term fiscal position. Nonetheless, improving bond demand and supply balance amid lower than expected government borrowing and India bonds' recent inclusion in the global bond index are tailwinds for bonds. In our view, the RBI's prolonged pause on policy rates, which was the sixth time in February of 2024, indicates the likelihood that bond yields have peaked. We expect the 10-year Indian government bond yield to trade in the range of 6.75 to 7% over the next 6 to 12 months. Within bonds, we are overweight medium and long maturity bonds given their attractive carry and potential for higher price gains as yields fall. In our assessment, high quality or AAA rated corporate bonds offer a better risk reward amid attractive spreads and improving corporate fundamentals. However, we see three factors which could remain unfavorable. First and foremost is the high fiscal deficit over the medium term. Second is the tight banking system liquidity and a lack of outright support from the RBI. And third is the above average inflation which could keep bond yields elevated. Coming to cash, we remain underweight. And finally, gold remains a core holding and a portfolio hedge against elevated inflation and equity market volatility. That's it in this edition of the podcast. Do reach out to your relationship manager for a copy of our India Market Outlook. Thank you for listening, and if you enjoyed the podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.